Welcome to the AI Brief from the YPO Technology Network. I'm Stephen Forte. Somebody finally put a number on it. On today's episode, a global insurance broker stood up on its own quarterly call and said out loud what its AI work has actually bought it. It was not a projection. It was not a case study written by the vendor. It was 6 separately measured results attached to 2 named executives in a room of analysts paid to challenge them. By the end of this episode, you will know what 4 hours of skilled work looks like when it becomes 5 minutes. You will also know why you have heard almost nothing like it from anybody else and why that silence is the more interesting half. One disclosure first. This call happened around the 30th of July, which makes it about 3 weeks old. That is not news, and I will not pretend otherwise. It is still the hardest evidence of real AI return on investment 6 weeks of research has turned up. Hold that sentence, it becomes the point. This is also not another survey. Last week's 6,000 executives answered their central banks anonymously and in aggregate. Today is one company named with its own executives putting checkable numbers on the record. The company is Willis Towers Watson. It is a global insurance brokerage and advisory firm. It sits between companies that need insurance and the market that sells it, and it runs retirement and benefits programs for very large employers. In commercial insurance, a schedule is the itemized document that says exactly what is covered and for how much. Building by building and vehicle by vehicle. Nobody gets to guess at it. The firm's chief executive is Carl Hess. Here are his words. Scheduled insurance that once took 4 hours are now generated in about 5 minutes. The software is called Willis Navigator, technology the firm acquired and renamed, now part of a broader in-house platform they call Neuron. The acquisition history is not the interesting part. The stopwatch is. 4 hours to 5 minutes is not a productivity gain. It is a change of unit. 4 hours is a slot somebody schedules, protects, and gets interrupted out of. 5 minutes happens while the client is still on the phone. The second number is larger and less obvious. Hess, again, real estate premium allocations that used to take 2 to 4 weeks are completed in minutes upon receipt of binders and final premiums. A premium allocation is what happens when a property group insures 200 buildings under one policy and then has to split that one premium across all 200 because every building has its own owner and lender and tenants who each need their own number. The binder is the interim document confirming cover before the full policy issues. Think of a restaurant bill split 200 ways, where every diner needs a separate itemized receipt for a different accountant, and none of the accountants agree. It never took 2 to 4 weeks because the arithmetic was hard. It took 2 to 4 weeks because it sat in a queue behind other work that was also not hard. The third number is about uptake rather than speed. One of the firm's offerings is called Rewards AI, and in this industry, rewards means pay. Hess said it now serves more than 5,000 client users, roughly double the number we cited last quarter. Doubling in a quarter is the kind of number a vendor puts on a slide. The difference is that this one arrives with a previous quarter attached so anybody can go back and check it. Now, the other side of the business. Julie Gebauer runs Health, Wealth, and Career at Willis Towers Watson, benefits, retirement, and pay programs for very large employers, which means service centers and an enormous volume of document handling. Her first number is the one every operator in earshot will feel. Service center representatives are spending a third less time on call wrap-up work. Wrap-up is the typing after the caller hangs up. Anybody who has run a contact center knows it is the least glamorous minute in the interaction and one of the most expensive because you pay for it twice. Once with the customer on the line and once after. Her second. Automated document review for new client onboarding has cut system configuration time by 60%. A new corporate client used to arrive with a stack of plan documents that somebody read before configuring the systems by hand to match. That reading is now machine work. Her third, and this is the one worth noticing. In several European countries, automating parts of the process has compressed the total time spent on retirement actuarial evaluation by about 10%. Actuarial evaluation is the calculation of what a pension promise actually costs, 10%. Nobody polishing a story includes the 10%. You lead with 4 hours becoming 5 minutes and you stop talking, including it makes the other five look less magical, which is precisely what makes all six believable. Some processes collapse by a factor of 48. Some hand you back a tenth of the calendar. A company reporting only the first kind is one you should not trust on either. You might reasonably think this is a firm talking up its own technology on a quarterly call, which companies do every quarter. Fair. Here's the difference. An earnings call is the quarterly session where a public company's executives report results and then take live questions from investment analysts. The executives are named, the transcript becomes public, the analysts have last quarter's claims in front of them. A press release is written to sound impressive. An earnings call is written not to get caught. One more item, and it is not a result. It is a plan. Hess announced an AI acceleration program called Propel, targeting a 30% adjusted operating margin by 2028, profit as a share of revenue with certain items stripped out, on $400 million of ongoing annual savings against a $625 million cash cost, all in US dollars. Forecasts are free. It is here only because it shows where the six real numbers point. Here's my read, and it has less to do with insurance than you would expect. The research behind this show spent 6 weeks looking for one company willing to put a specific, attributable number on its own AI results. 6 weeks, there was no shortage of AI news, funding rounds, model releases, security incidents, regulation. What was missing every week was one number with a name on it. Willis Towers Watson produced 6 of them in one call. That is not because Willis Towers Watson is 48 times better at this than everybody else. The evidence gap in applied AI is not an adoption problem. It is a disclosure problem. Companies are doing this work. Very few will say what it got them in public with a name attached in a form that survives a fact check. Most are not being cagey. They simply have no form that requires it. Picture Tanglin Instruments, a 300-person industrial instrumentation maker in Singapore. Entirely invented, and you know a dozen of them. Last year, Tanglin put a language model on its quotation process, a custom quote used to mean an engineer reading a specification, pulling comparable past jobs and pricing by hand. Turnaround went from 3 days to 4 hours. The win rate went up because the second quote to arrive usually loses. The managing director knows all of this, and his finance director has it on a spreadsheet. Nobody outside the building has ever heard it. Tanglin is not hiding anything. Tanglin is a private company. It has never been in a room where a named analyst with a public transcript asked the question, so the number has never been said out loud. Now multiply Tanglin by every private company in your own network. This is the difference between a country with no roads and a country whose roads were never mapped. One is a development problem and takes a decade. The other is a survey problem and needs only somebody willing to publish. Here is the part I would take from this, and it is not a task. Use those 6 numbers as a vocabulary, not a benchmark. 4 hours to 5 minutes on document generation, 2 to 4 weeks to minutes on allocation, a third less wrap-up time, 60% off system configuration, 10% off a regulated actuarial process. One internal tool doubling its users in a quarter. None is a headcount reduction. None is a revenue projection. None is a company-wide transformation percentage. Everyone is a named process with a stopwatch on it. If the numbers inside your own company do not have that shape, the useful question is what is being measured instead. Nobody made Carl Hess put a stopwatch on his own workflow and read the number out loud on a call where it could be checked. No regulator asks for that disclosure. No accounting standard carries a line called hours we stopped spending. He could have said the word transformation 4 times, moved on to the quarter's revenue, and no analyst would have blinked. He gave the 4 hours instead. Then he gave the 2 to 4 weeks. Then his colleague gave 3 more, including the one that was only 10%. Watch what a company agrees to be measured on. It tells you more than anything it chooses to sell you. 6 weeks of hunting for one honest number, and the firm that finally produced one makes its living putting numbers on things nobody else wants to quantify. Of course it does. It just turned the instrument on itself. Real AI results are not the rare thing. Companies willing to be checked on them are. That is the YPO Tech Network AI brief for Wednesday, August 19th. I am Stephen Forte. If this was useful, send it to a fellow member. I will be back tomorrow with more. Until then, stay sharp.